Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today we have another live stream. That's right. We can talk about anything you want to talk about, so you can always do a Q&A. And hopefully we're going to have a special guest today. Now, I know YouTube doesn't send out notifications when we start our live streams for some unknown reason. So we're going to have to start figuring out a way that I'm going to be able to send out emails to you so you can get these live streams when they're popping off live. So the first thing is down below in the description, almost near the bottom. If you haven't signed up for the email list, please sign up for the email list. That's the first thing. So today, happy Father's Day to everybody. Fathers out there, hopefully you're working hard to support your family. Hopefully you're supporting your loved ones and your children, because it takes a village to raise a child. So keep these kind of things in mind. So without further ado, we're going to get to the Tifosi optics. All clear today. But we still got the merch, Emerging Millionaires merch. Stop Struggling Now merch. You can go to the StopStrugglingNow.com website and see the SSN merchandise page. T-shirts, hoodies, leggings. We have it all. So today, we're going to be talking about how you can create your wealth. Let's talk about it. The assets that you're going to need. The pandemic has occurred. People in the streets rioting, looting. But you still have to make money to pay the bills. Thank you, Miss Learn and Earn, and welcome. Thank you for that. I appreciate it. Thank you for your support. So as usual, if anybody has any questions, if you want to talk about anything, it's an open forum. We can talk about almost anything, especially when it has to do with creating assets. No, as far as I know, you cannot have more than one My Jewelers Club account. In other words, one Social Security number, one My Jewelers account. Next, after My Jewelers, Soverina, thank you for the question. After My Jewelers, you can sit there and say, go with New Coast Direct. They report to 2 credit bureaus. And so the links are down below for My Jewelers, New Coast Direct, otherwise known as NCD, Ox Publishing, Hutton Chase, they're all down below. So you can use any of those to help boost your credit score. And if you have a problem where your credit score is real low and you can't take the hit for hard inquiries, then simply go get Credit Strong or Self Lender. You don't need both, but one or the other. Credit Strong and Self Lender, the links are down below in the description. They do not do a hard inquiry. And this goes for anybody that has bad credit or trying to rebuild their credit score. Credit Strong and Self Lender do not do hard inquiries, so it won't take a ding once you go past your 4 inquiries in 2 years. So thank you so much, Silverina. I appreciate you using my links. Thank you so much. Hello, Nisi J. Welcome to the live. If anybody has any questions, we're going to be talking about stocks, real estate, credit, assets. No matter what you want to talk about here. So first of all, speaking of stocks, I forgot about something. We're going to add, let me see here. I need to add, it's Father's Day today. So let me add something here. Tifosi. Let's go with Tifosi Optics. As you can see here, it's Tifosi. P as in Paul, T-I, C as in Charles, S as in Sam.com. And the reason why I left this screen like this is because if you sit on the homepage long enough, you get your chance to win a prize. And you get to sign up for the Tifosi Optics email list where they give you these special promotions. So today, free shipping on any sunglasses over $25. And as you know, there's a myriad of sunglasses for children, for women, for men, for cyclists, for golfers, for runners. There's a myriad. And unbelievably, most sunglasses are under $79.95. And some of the glasses, such as my Dolomites, you can change the lens. My Camrocks, you can change the lens. You can get different color lenses included for the low prices that they have. And some of them actually have it where if you sweat, they don't come off. They have a special coating on the outside edge of the sunglasses. And when you sweat or go in water, they don't fall off your face. And unbelievably, once again, this is why I love this company. They don't charge you Oakley prices. They don't charge you $200-$300 for sunglasses, and you can get multiple different lenses and frames. So check them out. Happy Father's Day to everybody. Get your free shipping for any orders over $25. With that said, so I just want to let everybody have that. And by the way, I'm using StreamYard for this stream, ladies and gentlemen. So you can understand what I'm talking about. StreamYard is free to use. So if you ever want to do a live stream, there's a link down below where you can sign up for StreamYard and you can start it. And hopefully today, I don't know, but I might be running on Facebook as well. I upgraded, so to speak, to the first level, and supposedly I'm streaming to Facebook and YouTube today. So this is a special treat, everybody. So you can see here, Tifosi Optics still on the screen. So I'll take that off and we'll get back to it. So again, welcome Jamie Golden. Jamie Golden, Credit Strong. I already have Self-Lender and my Jewelry Cup. No, you do not need Credit Strong, because basically Self-Lender and Credit Strong are installment trade lines, meaning they could go against your debt utilization. And since it's already an installment and 10% of your credit score is mixed credit, you've already checked that off the box. So your next move, in my opinion, would be New Coast Direct, because they're just like My Jewelers. They have a $5,000 trade line and they report to 2 credit bureaus. But remember, you want 2 credit bureaus to be have a high credit score, because usually most places go by the middle credit score, unless you're doing a FICO model where they just go by a combined score and then it equals 700, 600, whatever it comes out to be. So that would be my next move. I would not advise, if you have Self-Lender, that's good enough. Next move is to get My Jewelers, New Coast Direct, and then you go down the street, go down the line with Ox Publishing, Hutton Chase. Those are the ones you want to start with first, because that'll give you a low debt utilization number. Remember, you want to be under 29% for debt utilization on your credit file. Just keep that in mind. It looks like we're going to be talking about stocks shortly, because Curtis Davis, a special subscriber who handles, I see the smile on your face. We haven't mentioned you yet. I haven't shown you yet, but we're going to be talking about stocks, ladies and gentlemen, and creating some wealth this way. If you have not gotten your Robinhood and Webull apps, the free trade apps, in the description down below, that's where you can get them. All right. What credit card would you recommend for a mid-level credit score during these times? I don't, L. Johnson, thank you for your question. I don't recommend any credit card. Quite frankly, here's how it works, just so everybody knows. If you have let me think here, Wells Fargo, Bank of America, Chase, these type of Fed banks, as I call them, credit cards, they have Barclays. They have a higher score rating for you. So in other words, when you have a store credit card, that's a lower rating. So let's just say everything's equal and we're going from 0 to 50. I have a store credit card that could be worth 20, 25 points to me. But I have a Chase credit card that could be worth 50 points to me on my credit score. So it kind of does matter what card you get, but I don't usually recommend. I basically recommend try to get a credit card that has 0 annual fee, 0% APR for a year or two, and try to get some miles if you can. That's the first thing that I look for. So hopefully that answers your question a little bit. But I'm not one that says, okay, go get, the Chase, the Barclays, the things like that get you 40 to 50 points when you get them on your credit score. I say get the ones that work for you, where you're not paying interest, where you're getting something back for having the card. So that's your best thing you can do right there. All right, ladies and gentlemen, stock time. Now, we've been talking about this. I'm going to bring in Curtis Davis here in about a minute. First of all, if you have missed some live streams, you've missed some awesome information. When oil prices went down about a month and a half ago, we were talking about MRO. We were talking about Exxon. Okay, Marathon Oil is MRO. We were talking about Exxon, XOM. And while we were talking about this, a person came into chat and said, hey, what about OAS? And you're welcome, L. Johnson. And they said, what about OAS, petroleum? And I said, I never heard of it. And somebody in the chat said, well, at the time it was like 66 or 62 cents a share. So I said, I'm bullish on oil. I told everybody, buy some oil. Another stock we were looking at was USO. And everybody was like, it's going down, it's going up. And I kept saying, I'm bullish, let's get it. So and then about 2 weeks later, we had another live feed. And the person said OAS went down to 44 cents a share. I'll never forget that. I was like, holy smokes, I'm buying more. Everybody buy some more. Let's do it. And I have to say, if you would have done this 2 to 3 weeks ago, everybody would be ahead 10, 15, 20, 30% on your money. And if you were lucky enough to buy OAS, ladies and gentlemen, you done doubled your money. Because OAS as of Friday was $1.22, $1.25. So all that time when it went down to 44 cents, our dollar cost average from 60, let's call it 66 cents to 44 cents. That's a difference of 22 cents. So our dollar cost averaging was, let's say, 55 cents. $1.25. I believe that's over 100% on your money, ladies and gentlemen. And never mind about the USO and the MRO. Those are also up. So this is why you can't miss these. We're trying to help you. Got to have assets, ladies and gentlemen. Streams of income. Without further ado, Curtis Davis, Crown Associates. Let's find out what this is all about. Welcome to the live stream, Curtis Davis.
Hey, Eric, how are you doing? And stop struggling now. Thank you for welcoming me in.
That's right. Welcome to the live stream, my man. I'm glad you could join us. Thank you for your support all the time. I really appreciate it.
Yes, this has been the best channel for the last couple of years. I've been listening, watching, and it's been phenomenal.
Thank you. Thank you. Thank you so much, man. Right on. Yeah, so I know you've been investing in stocks. You send me some emails from time to time, and I'm loving what I'm seeing. You're saying, hey, I got 100%, 30%, 10%, 5%. This man's rolling.
This year has been phenomenal. And I just want to say to everybody, stocks it can be a roller coaster in the very beginning, but it's quite exciting once you start getting those 50%, 100% returns as Eric's talking about.
That's exactly right. And the beauty of it is not only that. Remember a few months back, I was trying to tell people to invest in stocks that had dividends. So a lot of people didn't understand. They're like, okay, it's 5 cents here, 10 cents there, 50 cents here. But over the last 2 months, if you've owned like AT&T, even if you own MRO, Exxon, all these people are giving dividends, and you would receive notification of getting a dividend this month or in the last 30 days.
Oh, it's so exciting, Eric, to get those dividends. I own over 100 shares of AT&T. And I tell you, every 3 months when I get that quarterly dividend, I'm loving it.
That's right. That's right. And so people that don't know, AT&T has a stock symbol of T, and it issues this year 52 cents a share every 3 months. So in Curtis Davis's case, he's getting $52 on money he spent way back when, and he's going to get another $52, unless, of course, he buys more shares, he's going to get more. But $52 3 months from now, and $52 6 months from now.
Exactly. And I've been investing in AT&T now for over almost 2 years. Since 2019 early, I've been investing in AT&T, so I'm pretty pumped about it.
Exactly. And ATT always hovers around $30, $29, $28. But
exactly.
That's just that everybody has to understand. There's a what you call the dividend rate, the yield rate. So if you buy it at, let's say, $30, and just so everybody knows, $2.08 a year is what you receive because you own a share of AT&T stock. So what you do is you do $2.08 and divide it by the stock price, and that gives you your percentage. So for everybody, when you're talking about 7%, 8%, 9% on your money, that's significant.
It's awesome.
Exactly. I'm glad to hear that.
So you mentioned
to hear that. A lot of people.
So you mentioned some of the stocks that I gained over 50% in, and you know, this is all for educational purposes here. Okta, Tesla, you know, PayPal. It's over 50% growth in the last 2 years, and I can't complain. So if anybody knows about Tesla, it traded at over, let's say, $200 for the last 5 or so years. But this past December, it shot up. So you could only imagine, after the last 4 or 5 years, I've collected over 100 shares, and it's doubled now. So I'm pretty excited about that. And I've been able to pick up over this last, I guess, quarter, some Ford, relatively cheap, 50 shares of Ford, and it's gone up to $3 from $4.50 to $6 plus the dividends. So pretty exciting times. And I think you mentioned to me,
exactly.
Eric,
and the sky was falling 3 months ago when everybody was like, "Oh my God, it dropped 30%," and people didn't even want to invest.
Exactly, and I think it's Warren Buffett says you basically buy when there's blood in the streets. So that's something that I took advantage of over the last 3 months. It just buy everything at 50%. You know, some at 30% off, but some of it was at 50% off. And so if you bought in right now, I mean, you could be up anywhere from 30, 40% easily.
Easily. Exactly. Easily.
I'm not sure you guys.
Yes, Ford,
yeah.
Tesla, basically everybody is almost up. You couldn't have gone wrong.
Yeah. I mean, I don't know if anybody's into airline stocks, but I know last week in the day trading realms, people had picked up over last month American Airlines, and I mean, it's up big time now. I more lean toward quality, so I picked up Delta, and so I'm pretty excited too because we're up 10, 15% as well. Eric, in addition, I mean, you mentioned
you couldn't go wrong. Remember, we were talking about CCL, RCL, which everybody doesn't know. Carnival Cruise Line, Royal Caribbean Cruise Line. They give out dividends.
Yes. And just to mention some more oil stocks, XOM, so that's Exxon, and I picked up ConocoPhillips at $32, and it's up over $45 now. So I mean, right now, as the economy picks up, travel's picking up, those stocks are going to surge. So it's a great way. If any new investor wants to get in, it's a great way to get in now while the economy is kind of on a low end. I think we lost Eric.
I lost you for a second, Curtis.
Okay, I
Whenever
think
I
we're
go
back.
away, you can still be on the stream.
So I just wanted to mention about assets. So assets are things
Yep,
that appreciate with
exactly.
time. So we're not talking about just becoming rich. We're talking about becoming wealthy. And in order to do that, you need to accumulate assets over time. So as Eric mentioned, if you're buying AT&T over the next 2 or 3 years, those stocks appreciate, and also you're getting the dividends. And if you do like I do, I actually reinvest my dividends. So I'm on the drip for most of my stocks. So I'll give you an example, like NRZ last year, this time I bought over 100 shares of it. And this year, now I own 128 shares of it. So I appreciate in terms of stocks almost 28% in terms of just shares. And at any time, of course, I can turn off the dividend reinvestment. But I don't plan on cashing out anytime soon because I'm a long-term investor.
Well, you got great advice. That's for sure. Great advice. Now, you're going to tell me about this Crown Associates?
Yeah, Crown Associates, I started back in 2014. It's sort of IT staffing
If you can hear me at
services.
all, I know I lost you.
Yeah, so Crown Associates, we do IT staffing. So basically, we do a little bit of hiring. We connect companies with talented software developers. Um, and we've been on various contracts through the years. It just really depends on the contract, how fast the business grows. But I will tell you, contracts are great. With the IT staffing, basically it's a way you can set up long-term money. So typically we look at work that needs with small businesses, and sometimes we actually get government contracts, and they can go for 2 to 3 years. So that's just one of the things that's exciting about contracting.
Hey, that's a stream of income, right? That's what we're
Yes.
talking about here. We need 8 streams of income, 7 or 8 streams of income. That's what we're trying to do. So that's another stream of income you have coming in.
And also, as Eric has talked about many times, business credit. It is a phenomenal way to set your
Do a share
business up.
screen scenario here where
So my company, because of contracts and stuff, I've built up a little over $100,000 of business credit using a lot of the strategies Eric talks about in his videos. So the business stream of income, and as well as the stocks that I've been accumulating, um, it gives me a lot of flexibility. I think we lost Eric.
I'm still here, Curtis. I always put you
Okay.
on the screen by yourself sometimes.
So one of the things that Eric talks about a lot is credit. And credit, when you get in the 700s, it opens many doors for you. So that's whether you want to buy real estate, expand your business, open a brokerage account. Credit
That's
is
exactly right.
key. So my man Eric, he drops a lot of nuggets in his videos. I mean, he goes into a lot of details that a lot of gurus don't do. These gems that Eric drops. I mean, these could save you hundreds, if not thousands of dollars, but also put you in a position to make tens of thousands of dollars in your business. Some of the things Eric talks about, social media marketing. That's definitely a key in business. Always look into understand affiliate marketing. How do you expand and generate a second or third stream of income? You can do that easily with affiliate marketing. Many times, when I'm going to different network meetings, I come in contact with a lot of business owners, and it's all about networking. And if I do a little marketing for them and they do a service for me, we basically both make out on the positive. So affiliate marketing. And just to go back to social media, I mean, we have Facebook, Twitter, Instagram. All these tools are free at your disposal. And I think he mentions Fiverr, a way to get your logo generated quickly. Fiverr, it's an excellent tool to use if you don't want to spend a lot of money to get your logo generated and made. I think we have Eric back.
That's right. That's right, Cam.
Yep. And I
No, you're doing good, man. I was letting you have this flow to yourself. So no problems. So you were doing great.
So some of the tools, I guess Webull and Robinhood. Eric?
Thank you so much for the caring and the love that you mentioned, because this is the no guru zone. Yes, Webull and Robinhood.
Yeah, I've actually used Robinhood now for about a year and a half. Actually, I'm very happy with the app itself. I think also there's a couple other.
Same here. And Webull gives you much more details, but I just like Robinhood's a lot easier for me. Everybody has.
Yeah, Robinhood is a cool app. I mean, it's awesome. With a couple of clicks, you're able to purchase stocks and you're in there. And I think they just started offering partial shares. Is that correct, Eric?
Exactly.
Partial shares. So now, even if you want to own the biggest stocks like Amazon,
fractional
Google,
shares, which is one of the reasons why I think stocks are going to continue to rise.
Exactly. It's all the new Generation Z and millennials now. They found out that, hey, guess what? The stock market isn't for just the wealthy. It's for everybody. In fact, I think TD Ameritrade and Charles Schwab merged, and there's no fees. So you no longer have to pay fees in order to, buy your favorite stock.
Exactly.
So Eric, I think we have a question here.
Yes, we do. They said, where do you get your business credit from? Well, hey guys, Google or go to the YouTube channel, the Stop Struggling Now YouTube channel. I started out for you, the Net 30s, and also go to nav.com. If you order the $29.99 or $39.99, they report to your credit. So you can have 5 items reporting on your business credit just from Net 30s and nav.com to get you started. You ultimately want 10 accounts. In fact, you want as many accounts reporting that you pay your credit on time for your business. Same as it works the same way as your personal. The more people that you pay on time, the more likely you're going to be able to get $20,000 lines of credit or credit card.
And I want to tell people I start the same way Eric is describing. I started out with Quill, Uline, Granger, and some retail stores like Target, Office Depot. I got lines of credit. And
Exactly.
it really helped jumpstart my business. I then went on to get fleet cards, ConocoPhillips, Chevron. I mean, so there's just really no limit. Credit it's everywhere in business. You need it to survive. You need it to enhance and expand your business because you need to run sometimes Google ads. You need to run Facebook ads. So you need business credit in order to help your business to expand and grow.
Exactly. Great points, Curtis Davis. Exactly. And it helps you out greatly when you don't have to use your own money and you're able to pay it back over a period of time. So even though you can spend $100, let's say, it's a good thing that you don't have to take it out of your pocket. You can say, okay, I'm going to use $100 and then I know I owe it in 30 days. So now you can recoup your money without having to use your own cash flow. It's beautiful.
Exactly. And I've used business credit for equipment leasing. I mean, they give the best terms. I think one of the companies we use is Dell. Another company we use is Bank CIT. I mean, they give great terms. I mean, I can easily support my staff and give them brand new laptops every 3 years if I want to, easily with a business line of credit that I have because I've established it 4 or 5 years ago. So it's quite exciting after a few years, easily, if you just follow what Eric talks about, building your business credit in the long term.
Exactly. Everything is long term when you talk about creating wealth. In this day and age, in this society, everybody wants things within a month or 2 or 4. But that's why I've always been telling people business credit, don't even think about anything for about a year minimum. Build it and keep going. Personal credit, the same thing. Everything you're trying to do. And by the way, Curtis, I'm glad you mentioned your Dell and getting your employees. What a lot of people don't understand is the reason why you get to keep your wealth when you have a business is those items you can depreciate on your taxes. So there's a way that you get to keep a lot more money just on paper. So let's say a Dell laptop costs $1,000. First off, I get to write it off because it's a business expense. Second off, I get to say, okay, that laptop's going to only be worth $200 5 years from now. So now I get to write off $200 a year over the next, or I can actually take the whole $800 if I wanted to, and you get to write that off against your profits. This is why you have Amazon, Apple, Ford, all these people. This is why they don't pay taxes, ladies and gentlemen. So you have to start thinking. Get yourself in your mind. You're the CEO of your life.
Exactly.
Think like a CEO.
Exactly. It's all on paper, some of it. Like you said, depreciation and tax advantages, it's all on paper.
That's why millionaires always have it.
So I know a lot of people talk about getting the EIDL and the PPP, And a lot of that is just based on business banking account history. And so when you build that relationship with Chase, Bank of America, your local credit union, Navy Federal, it's already in the database. It's already in the history report. All I have to do is go back and look and say, hey, last year you did X amount of dollars. How much do you need? And the
Yep.
only thing changes is actually the better terms.
Exactly. 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 I tried to explain to a few people, they hit me up in emails and they would say, I didn't get my EIDL. And of course, my first question was, how long have you had your bank account and how long you've been in business? Because everybody that's been in business past 6 months, they got EIDL within 3 weeks.
I mean, I think all the business owners were calling each other, and within minutes, we all were like, hey, I signed up, you signed up, and we were
Yep.
just, grinning.
Yep. Yep. Free money. Unbelievable. 10,000, I guess I should say, because I did a video on it, only one video, but I should say it since we're on the live stream. If you plan, they might have an EIDL still coming up, but if you get an EIDL or a PPP, you have to read the fine print. The EIDL, as long as you had $10,000 or less, that's basically free money. You didn't have to pay it back. Once you go over 10,000, that's a loan, and you have terms that you have to abide by. So you can't just go out there and say, okay, they gave me a $25,000 check and go out and buy cars or things like that. Now, when they come back and audit you and want their money back and they find out you bought cars, you could be in trouble with the law, and
Seriously.
they could revoke the whole amount and make the whole amount a loan. So now you're going to lose twice. And the same thing with the PPP. I didn't go over the PPP for a reason, because I didn't want people to get a PPP loan and then be out here buying cars and doing all this crazy nonsense like a few people have. All you have to do is Google, and you'll see people are now in federal court because they use their PPP loan than payroll.
Exactly.
So these are the kind of things you got.
Once you start borrowing money from any kind of government entity and also doing business with the government, you have to be very careful. So Eric is exactly right about, getting those funds any time of the loans, even though they're actually at pretty good terms. Some of them are 1%, up to 5%. But you've got to be quite careful about what you spend the money on.
Yep. Exactly. People get in trouble. And that's for any loan, actually. As you know, because you've had lines of credit and you have credit card offers, you'll get stuff in the mail that for your business, let's say, just like personal, but business we're talking about today. You get credit card offers in the mail and you read the fine print and they're going, we're going to give you 0% interest for 3 months. After that, 26.9%. And you're sitting there going, that's crazy. So just because you have a business credit and they're sending you these offers, you have to read those fine print items. Do not think because they're sitting there going, okay, here's a $35,000 line of credit, and you're thinking, oh, I got it 30. Next thing you know, you might have had to start paying interest just because they gave you the line of credit, not because you took the money out, but they try to trick you into making you pay them sooner than later. So you have to watch the fine print and make sure you get that line of credit that says only the amount of money I take out, when I take it out, am I going to pay the interest on it. So you have to watch the fine print. Just because somebody's offering you sky the limit and you think it's a great offer, think again. They're offering it to you for a reason. They're trying to make money. No, there's no gifts out here. So
exactly, $100,000 at 3% is great, but a lot of times when you're first starting out in business, they may offer you $100,000, but guess what? They're going to offer it to you at 20% interest. They're going to try to put you out of business before you get started.
Exactly. Exactly. And that's why hopefully Stop Struggling Now subscribers, you are getting this information. And there's a lot of people that have been listening to what I've been saying about business credit. And I get people that send me emails saying, hey, I got this from Bank of America or Wells Fargo. Do you think this is a good deal? And as soon as they start telling me what the offer is up front, I just tell them, no, it's not a good deal. You know, they're sending me stuff over talking about 0% interest for 6 months. But in the fine print, it says it's a variable interest rate, meaning variable interest rates mean you could have a 10% interest rate, but next year you could have a 20% interest rate. They get to vary it, and you don't have no say. So people have to watch out for this. And a lot of times they're sitting there looking at these items come in the mail, $25,000 credit line, credit card, and they're not understanding that they're going to be like Curtis just said. You'll be out of business getting that loan because you're not going to be able to pay back 25%. That's crazy when you have 25% interest rate.
And then that's why it goes back to personal line of credit. If you got excellent credit, you can always leverage your credit to go out and get more credit. So let's say your business this year is doing $100,000. Right. And for whatever reason, next year it starts to slow down. Well, if you've always kept a good personal credit score, you can still go out and help your business again.
That's right.
So there's just many techniques in keeping your business alive and making it grow that, you know, I've seen people with excellent personal credit go into the bank in one day and go get $50,000. You know,
exactly.
So, you know, it's always to your advantage to be improving your personal credit and as well as building your business credit.
That's right. And if you guys missed the LLC videos, again, go to the YouTube channel, the Stop Struggling Now YouTube channel. There's a little search bar. Put in there business credit, LLC, all of that. I have videos on all of it, free. The No Guru Zone, ladies and gentlemen. You know I hate gurus. And if you just saw that last video that I talked about real estate, then you would have been, I was livid because there was a guru talking about real estate and telling people it was a good deal when in fact it was a very bad deal.
I saw that video, Eric. The HOA fees, and there was just so many fees, the deal wasn't even worth it. And if exactly. You talk to experienced real estate investor, they'll tell you the money is made when you buy the property, not after you buy the property. It's made before you buy the property on paper. So where you can see where all the pitfalls is, you know, where you're making money, where you're saving money, and the long-term depreciation that you're going to be saving. So, I mean, it's all on paper first.
That is it. Exactly, Curtis. That's what they always say. This is not rocket science, ladies and gentlemen. Just because a guy has, I'll use those fancy cars, the Lamborghinis, the $1 million plus homes, that doesn't mean they know what they're talking about. I'll say it again. When somebody shows me drive up to my front yard and have a Lamborghini or some fancy car that costs $200,000-$300,000, my first question is, what are you trying to sell me? Because otherwise, this makes no economic sense to buy cars at that high price value. So it's like, that's crazy. So I'm like, no, I know you're selling me something. Why are you rolling up here in that car? You need some money from me to pay for that. So
the no guru.
But anyhow, we're talking exactly Black Cash. Welcome, and we're talking about streams of income, ladies and gentlemen. The real estate's one of them. We've talked about stocks. That's another one. Curtis touched upon where his own business, the Crown Associates, has staffing and does things in that name. So that's another stream of income. Now you're started, and we touched upon when we have to sell our stocks or sell your investment property, there's things called capital gains, and that's another calculation that's considered income. We talked about dividends from Exxon, AT&T, companies like that. That's another stream of income. We still have more. So when Curtis was talking about selling online and affiliate marketing, That's another stream of income. We live in the best time. This is the land of gold and opportunity, ladies and gentlemen. I don't care about the pandemic. I don't care about rioting in the street. I know this. I'm still going to have checks coming in. That's the bottom line, because you need multiple streams of income. When you have one check that's not coming in, like my Airbnb money is really messed up. They shut down all the resorts and they're not doing anything. Then I better have well had some other streams of income coming in. Otherwise, I'm going to be hurting. And there's 30, 40 million people in America just in the last 2 months that do not have these extra streams of income. So this is why we've been talking about it. And Curtis, he's been doing extra streams of income for years. Yeah. So this is why he's now sitting here during the pandemic with a smile on his face, not worried that much. He's still worried a little, but he's still sitting there going, well, I got extra streams coming in.
Hey, Eric, just on the stocks. I mean, sometimes even when the market first opens, I've already made $200 in the first 5 minutes. I mean, I barely woke up really good.
Laptop money, making money while you
laptop.
sleep. Exactly. And here's the funny part about stocks. Stocks are long term. You have to look at it this way. Your price of, let's say, for instance, you made $30,000 in the year 2000. What happens is the same $30,000 is probably worth somewhere like $60,000 now in today's money. So this is the same thing that happens with stocks. Even though the stock was like $6 in 2000, simply because money, it appreciates and there's inflation, that $6 stock will now be maybe 15 or 20. So people, you have to keep an eye on everything. The stock market generally goes up simply because there's inflation, and then you hope you get to ride the wave like an Amazon, an Apple, Tesla, things of this nature. You hope you can pick a few that might rise 30, 40, 50%.
I'll give you two that I have been big on: PayPal and Square. I mean, I got in Square 3 years ago at $20.
Exactly.
And now it's $80. And the same with PayPal. I mean, I had a broker at one point. He gave me a couple of tips too. But PayPal, I got in at $39, and the stock is over $115 now. So you guys just do the math. Inflation is real.
Exactly.
But the cool part, as Eric mentioned, is the stock value keeps up with inflation. So it's a great time to be in the stocks. I mean, if you just look at Delta, I think right now it's trading at $32. During this recent pandemic, it got as low as $22. And its actual value is somewhere about $60. Over the next 2 years, that's all money. You know, as people start going to Vegas again, it's all money. They're floating the money back in. In fact, I'll tell you another one I got in: Wendy's. I was a big proponent of Wendy's before the pandemic, and it got down to $10. Well, guess what we do at that point, Eric? When it gets back down under the value, we buy more. So, so I rode Wendy's back up to $22.
Oh my God, that's right. We know we're buying
$10.
By the way, just like when we talked about OAS like a month ago or 3 weeks ago, I'm going to say it again. I'm bullish on airlines. Cruise, get in while you can.
Exactly. Because guess what? The other night when Vegas opened, I looked on TV. I just laughed. I said, guess what? I'm buying more MGM.
Exactly. Las Vegas Exactly. I'm like, it's on. All these companies are getting their lending in order, their debt in order, restructured because the Federal Reserve rate went down to 0%. So they're getting to borrow money cheaply so they can do their debt. So people don't understand why the stock market's going up. That's part of it. And the other reason is the Federal Reserve has backstopped all loans. They're buying up everybody's debt. They're just like, don't worry about the debt. We got you covered. So now they're like, okay, we're back good now. They can start their businesses without having to worry about their debt that they owe. So that's a huge thing.
And the other one you mentioned to us, I think, Dave and Buster's. What a stock! What was it? $7?
That's right. That's right. I was, yeah, that's right. That was like 2 months ago. I was standing out in front of Dave and Buster's, and I said, "Hey guys, you might want to get some of this Dave and Buster's." And everybody's like, "No, it's like $6, $7, $8." It dropped down from like 25. What are you thinking?
So Eric, what was that? Was that 120%?
Exactly. Exactly. I just look at my account and I'm just sitting there every day like this. Just like you said, I wake up and everything's just up. It doesn't even matter what you picked. It's almost like everything is $250. It's like every day I'm just laughing like this is unreal.
And I think we took advantage of the velocity shares. I took advantage, I think, at the very end of February. UVXY at $12 and change.
Yep. Oh man. TVIX went up to 890. Well, I sold mine at like 890, I think, but I think it got into the 900s. It was unbelievable. And now it's back down to like 120 TVIX. It's unbelievable. There's going to come a time again that'll come up. But I want to give a shout out to Dave Sincere. Thank you for your comments, man. I'm glad you bought Delta at 1989. In fact, wow. I'm still going to buy Delta tomorrow. I'm telling you guys. AAL. I'm telling you. I'm buying.
It's like tomorrow. Free money.
Exactly. Tomorrow I'm buying CCL, Delta Airlines, and I'm missing somebody else. I'm going to be buying like 3 stocks tomorrow. But those are the first 2 that I'm getting at 9 a.m. in the morning.
Now, Eric, you also mentioned, and one of the reasons why I listened very closely was when you were talking about 401k versus investing yourself in your own brokerage account, the value of that.
That's right. Exactly. I'm glad you mentioned that because most people don't realize they're happily giving their money away to somebody else, but that somebody else is taking their 0.5%, their 1% a year, even some 2% a year. And what's furthermore, look at this. Me and Curtis are sitting here telling you guys we have our own accounts and we're getting 30, 40, 50, 100%, 120, 130% on our money. But when you have a 401k, the people that are watching your money are getting these returns. And then they're sending you a statement going, don't you feel good? You got 8% this year. I mean, people, you don't understand what's going on. They're siphoning off your money. They're using your money to make 100% on the money and telling you, here's your 8%. It's crazy.
Hey, Eric, I mean, seriously, 4 or 5 years ago, I didn't believe you could make 100%. But over time, I seen it. I mean, even if you want to look at some pharmaceutical stocks.
Yep.
NVAX. I don't know them all. Gilead. Some of them are up 100%. I got in NVAX again at like $12 or $14.
I wish I would have got in.
And look, I think one day I looked, I was up 200%.
Oh, I know.
So there's always room for a little speculation. It's like 5% of my portfolio, but yeah, so you could still gamble a little bit.
Exactly. Hey, and that's basically what you have to understand, ladies and gentlemen, is that when you invest, you don't know in reality if a stock is going to go up or down just by a symbol. This is why you have to look at what they do. You have to look at and see what genre, what type of business they're in, and then you make a calculated guess as to what's happened. And quite frankly, you cannot win them all. In fact, you can't win. If you can win 70, 80% of the time, you're doing good. No, I'll even put this. Warren Buffett sold American Airlines and Delta Airlines 2 months ago at one of their lowest points, and he bought both of them when they were $40, $50 a share. He lost money, and they call him the Oracle of Omaha, and he has billions of dollars at his disposal, and he still lost money. He's patient. The stock market, his own rules, he should have been patient, and he would have gained back $30 billion if he'd have been patient, but instead he sold it. So you have to understand, you have to be patient whenever you invest in the stock market.
Exactly. It's really about patience because, like, for example, everyone uses telecommunications. So I always buy both. So you notice I bought AT&T, but I also bought Verizon. So it's normal price is $59. Well, this week while I was down to 54, 55, guess what I did? I bought more of it.
You said, wait a minute, it was like 50, like 6 months ago. What's going on here? Maybe get some more of this stuff.
So I love it. I mean, it's just a game. It's just like seeing a pair of Jordans for like $50 instead of $250. You buy it while it's undervalued. You know the price of Air Jordans is $250. If you see it at $100, it's a steal. It's the same philosophy with stocks.
Exactly. and speaking of that, a friend of mine was talking about stocks and the airlines, and I said, hey, did you guys remember I mentioned to people, get Boeing, BA. It was $100 a share 2 months ago. Yeah. And now it's over $200, 100% on your money. Again, it's unbelievable. Oh, and by the way, I forgot. Here's my third and fourth stocks that I'm getting tomorrow. Revolve, RVLV, and I'm also going to get Raytheon, RTX.
Defense stock.
Yep. Raytheon is like Boeing. They have defense contracts. So they're guaranteed money. So they're almost both are 3/4, I guess, maybe 3/4 to a half, depending on which company. Boeing is 2/3 back to their price. Raytheon is still like 60% of their price before the pandemic situation. So I'm getting Raytheon tomorrow as well, RTX. So
doesn't it feel good?
Exactly. And what I always talk about is I'm using their money to make more money. That's what I like about it. This is how you create wealth, ladies and gentlemen. You let your money work for itself. So before I forget, welcome Dave Sincere, welcome Black Cash, and everybody, please hit the like button while you're here, please, so we can get this video out. Because the special guest, Curtis Davis, talking stocks, talking about creating wealth, business credit. We're talking about it all. If you have any questions, post them up. Both of us are going to answer. So this is a special treat today. A subscriber, a supporter on here and willing to come on here and talk. Can't get any better than that.
I mean, it just doesn't get any better. I mean, we're riding the wave. I mean,
that's it.
You know, the last 2 months, I mean, I couldn't believe April. It was like everything just started recovering. And even real estate, NRZ, I got in at $15. I'm riding it back up again.
Exactly. Remember we were talking about that. I said, hey, you got choices. Buy some more. It was like $5. It was crazy. It was crazy. All these little REITs like that. Crazy. I'm trying to think of some other REITs too. Oh, by the way, ladies and gentlemen, here's the other thing. Whenever the Federal Reserve prints money, that causes inflation on the backside. So that means the dollar I have today is worth less. So there's two ways you can fight this. Either you can do what we've been talking about, be in the stock market. The second way is you can be in the stock market where I say buy gold, silver, precious metals. You can buy ETFs that are gold miner stocks or gold stocks, such as I have mentioned in the past, AUY, for instance. Okay, there are stocks, B as in boy, T as in Tom, G. So over time, as inflation kicks in, the price of gold and silver stays pretty much the same, and the ETFs gets to take advantage of this. And that's why I love silver stackers. If you stack silver, ladies and gentlemen, keep stacking it because I'm buying the ETFs. So that just means there's less available. So there's a supply and demand. So we get to earn a 1% a month while you guys are stacking your money in a black hole. So everybody, I suggest you get gold and silver or precious metals, but a small portion, because once you put that money in a black hole, it doesn't earn anything when it's a bar of silver or a coin. So if I put money in the stock market, that money, those people who spent $100 of gold or silver in the last 2 months, they literally lost out on potentially having $200 to $250 in their account. Meanwhile, that $100 has lost value in reality. So you have to keep in mind what you're doing, and there's ways you can manipulate the system. So this is why I say look for some of those gold miner stocks, ETFs, and like I mentioned, BTG, AUY, gold, GOLD. Get a few of those, and then just sit back and let them go and rise because they go according to inflation. So either way, you're going to come out ahead just on those, but you got to be patient. That's it.
Exactly. So just like you buy insurance for your car, just like you buy insurance for your home, you buy gold and silver to help hedge the effects of inflation. So you always buy protection. Whenever you have wealth, you want to be able to protect those assets. And when you buy gold and silver, that's one of the strategies that you're deploying.
Exactly. And Black Cash, if you have the credit score that you're mentioning, the 767, the 777, 803 credit scores, yeah, you don't have to ask me for anything. You're getting stuff in the mail. They're offering you all kind of crazy nonsense right now. Here's what I'm going to say. Whatever you're going to do with your credit score, make sure that you're going to get some income producing property. Use your credit to get something that's going to be income producing. That's all I can tell you right now, because do not use that 777 middle score to go out here and buy a car that goes down in value. Wait a minute, is that a CEO of my life t-shirt?
This is the CEO
What's going on,
shirt.
Curtis Davis?
This is the CEO shirt. I love it. I love it. The whole CEO thing going on. So I really appreciate it.
Oh, yeah, he's got one. You guys go to stopstrugglingnet.com and get yours. Oh, man.
I wear every
Black
Friday.
Cash. Here's what Black Cash and Curtis Davis, you can talk about the man who has an awesome credit score. The first thing, Black Cash, go down, and I'm hoping you have an LLC, because you got to start your LLC, because you can use your personal credit to get your business credit started at the same time. So, and with an LLC, you can also use it to buy property. You get an LLC, you buy a property under the LLC name. With your credit score, you're able to get in at a low price for income producing property. Let me give you an example. You can go down and get an FHA loan right now and get a fourplex, a threeplex, or a twoplex. And you just have to put down well, I call it 4%. They call it 3.5%, but with extra fees, it's going to be 4%. And you can now have income producing property for 3% on your money. So you could put down for $200,000 property, roughly $7,000, $8,000. You could have profit of $600, $700, $800 coming in just by using your nearly 800 credit score. And they will give you a loan because of your high credit score, whether you do this personally or LLC. Either way, you win. And that's how you create another stream of income under real estate. That'll get your wealth going. You have all the tools necessary right now. I'm glad you listened to me, Black Cat, and got your credit repaired up to that number. That is awesome.
The key is you have the ability with an excellent credit score to acquire assets. So that's an asset of, say, Black Cash. That's an asset of, let's say, at least $100,000, and you're able to secure with, let's say, $6,000 or $7,000 down. You've got an asset worth $100,000 now, and then you're cash flowing on top of that. Man, you're winning right there. I mean, that's the cash flow game and asset and wealth appreciation game all in one.
Exactly. Because everybody gets caught up with they're going out here buying a house or buying cars, getting credit cards. Now you're siphoned off your wealth and don't even know it. Now you're working to pay off debt that goes down in value instead of working to get assets that go up in value.
Exactly. So even when I look into buying stocks, I think we mentioned Delta. I'm buying it at $30, but I know when the economy is back in the full swing, it's worth $60. So I'm looking at doubling my money. In 2 to 3 years, those 100 shares will double my money. So that's all it is. It's just acquiring the asset first. You know, whether it's buying real estate,
while you're sleeping, while you're going on about your business.
So, I mean, that's just the wealthy have learned that game and played it over and over again. You know, they buy the asset at a discounted rate and they watch it just grow over time. And then as far as stocks, if you like technology, I do. You know, PayPal, Visa, Apple, those are stocks that aren't going anywhere. The trends of technology are going straight up. You know, the whole contactless society. So, you know, with your PayPal account, you don't have to touch any buttons. All you do is push the button on your app and the transaction is committed. So, I mean, we're headed that way. So if you can look at any stocks and technology like that, a big one, Apple. I think, Eric, you've talked about Apple's balance sheet before. Apple has billions of dollars. So if you're buying quality like Apple, they're not going anywhere for the next 20, 30 years. And going back to Boeing, I mean, Boeing 30 years ago was trading at $30. And I think right before the crash, it was 300. I couldn't believe it. I just looked at the chart because, I mean, a $300 stock down at $80. It's like free money.
Exactly. 100% on your money is crazy.
And just to go further on the Boeing contracts, if you guys knew how much they charge the government for a plane.
And we still have some ways to go too, which is unbelievable. We can still get in right now.
Right. Plus a dividend. I mean, so if you're buying, 10, 30 shares every quarter, if you're reinvesting, you're getting more shares every 3 or 4 months. So it's really a win-win. I mean, I talked to some people's portfolio about some people's portfolio that I know, and it literally grows
Exactly. And this is how the one
$1,000.
percenters stay one percenters while not have work.
It's literally like their 1% is like $10,000 a day, you know, in some cases. So, I mean, there's nothing wrong with the stock market right now. It's working.
No, exactly. Ladies and gentlemen, illustrates the point as well. If the stock market goes back down due to whatever later on this year, all that means is buy more. That's all it means.
And Eric mentioned capital gains. So if you keep the stock for at least a year, you're only paying capital gains, which is 15%. So normally on the stock, if you buy and sell it before a year is up, you're paying your normal income tax, let's say 22% on the stocks when you sell it. But if you keep the stock for over a year, that's considered a capital gains. So at that point, you know, they say on the profit, you only pay 15%. So that's even better. So the longer you hold that Boeing stock or AT&T stock, and if you have to sell it after a year, they're giving you a discount. So it's a win-win again. So I guess we lost Eric here for a minute, but I mean, wealth creation is all long
I can
term.
only laugh because it's one percenters don't lose.
I mean, there's people that actually write off their losses every year too
That's
on their
exactly.
stock. So that's another nugget that.
And like I've been saying for the last month, 2 months, one percenters don't lose.
Look, it actually helps you to have to write some of it off if you do lose.
Exactly.
It's so funny.
Exactly. Hey, that's part of the one percenters way. The wealthiest.
But
exactly.
But part of the game, again, is personal
everybody.
credit.
If you need to hit me up, find out any info, you can always email me. I lost you there for a second. Well, it looks like I lost there for a second. But everybody, if you ever need to contact me, just go to Eric at StopStrugglingNow.com and email me that. And I'll respond back within 24 hours. And I don't charge a consultation fee. I don't charge anything. This is the no guru zone. So with all that said, it looks like we lost Curtis here. But I want to thank everybody for watching. Thank you for listening. And thank you, Dave Sincere. Thank you so much. I appreciate that. That's the goal, because people are talking language and they make it sound harder than it is. So when people are saying dividends, when people are saying assets, when people are using terms as depreciation, appreciation, things of that nature, they try to make it seem like harder than it is when they could say it goes down. But that's the price that you pay for financial information, because it really is that easy. Yet the wealthy want you to believe it's hard. So that way you can keep being an employee and work for them. That's the whole game plan here. Once you realize the whole game plan is, as long as they can make sure 80% of the population works, they get to sit high on the hill castle. But you don't want to be that. You want to be CEO of your life. You build your own castle. I think I lost you there for a minute.
So I just want to say thanks, Eric, for bringing me on. I'm Glad to come back
wait
on.
for a second, Curtis. Hold on. Then I'm going to bring you back. Just a second. So much. Thank you, Miss Learn and Earn. I appreciate it. And hopefully everybody, Mr. Curtis Davis here, has spent his Sunday afternoon on Father's Day to help us all educate us and understand some of the assets, the real estate that you can get, the stocks you can buy. Hopefully you can go tomorrow and get a few more shares of stock. And we'll be talking in about 2 weeks from now. And we'll hopefully be able to sit here and have big ass smiles on our faces and saying things went up and we're making more money. And this is how you do it, ladies and gentlemen. Curtis, we're probably going to close this out. Do you have anything further to say?
I just want to say, everybody, keep following Eric. He's got excellent information. And again, this is the No Guru Zone.
I think we might have had a bad connection. I run this. That's right. All right, Curtis, thank you so much, man. I'm going to close this out right now. I appreciate it. Thanks for your support as well, man. I always love that. Joshua Felder, I didn't mean you. I saw you that. So thank you, Joshua Felder, for your support as always. And we'll talk later, Curtis.
Thanks, Eric.
All right, ladies and gentlemen, don't forget to hit the like button and subscribe and click the bell. So thank you so much for this live stream. We've been on here an hour and a half, hour and 15 minutes. And I want to thank Curtis Davis, a subscriber again. And if there's ever a subscriber that wants to be on, or somebody that wants to talk about assets and talk about credit repair and talk about anything that has to do with improving financial success, financial freedom, financial literacy, come on down. I have no problem. In fact, I have no problem with the guru coming on down. And then that's going to be a battle. But nonetheless, thank you for watching. Thank you for listening. And please like, subscribe, and click the bell below so you get the latest updates. And I know it's hard out here. That's why I have this Stop Struggling Now channel. I'm hoping to help everybody out. Not just a few people, but everybody. As you heard me say before, a rising tide lifts all boats. So as long as we're all in this together trying to rise up financially, then we can all come up financially. Thank you so much, Black Cash. Thank you, Miss Learn and Earn. Thank you, Dave Sincere. And I missed a few other people that came in here. Soraya Douglas, thank you so much. Let's see, who else have I missed out on? I missed a few others, but Joshua Felder, thank you. I saw you in here earlier. Thank you for that tip again on OAS. And don't forget, get your links down below. It's hard out here. Robinhood and Webull. And in the description, there's other information that can help you out. In fact, using this StreamYard app, which is free. Podcast, you can get Buzzsprout. That's free. And don't forget about our Facebook group, Emerging Millionaires. It's in the description down below. And with all that said, keep your head up, keep moving, and I'm out.